All right. This is episode 9. Is it 9?
No.
That's going to be the snippet we put in the beginning, the the outro take.
Okay.
But yeah, I think it is episode 9, right?
I think so.
Yeah, episode 9 of the Ding Fu podcast. If you've been listening all this time, we almost hit double digits. So, congrats for being with us since day 1. um, so this episode, we want to talk about cryptocurrency and the blockchain technology as a whole, right? Um,
Hmm.
and Tony, I'm just gonna hand it over to you real quick because this was a topic that you wanted to bring up on the show. This is a topic that you've kind of had a personal interest in for a while now, for a little bit. Um, so yeah, just tell me how you got interested in Bitcoin and cryptocurrency technology as a whole, and yeah, what are your thoughts on it?
Yeah, how I got interested, I think, was mostly through podcasts and kind of interviews with people, just listening to people talk about how crypto works and where it was going.
Mm-hmm.
My first experience with crypto, I think I told you before, was that I actually owned about zero point 0.8 of a Bitcoin back in 2015, which I think today is worth, around $40,000 USD, right?
Mm-hmm. Mm-hmm.
But of course, I have no control over it now because
You're
I've
right.
lost it.
It's
Yeah.
amongst all the millions, probably billions of lost Bitcoin over the years.
Yeah, I wouldn't be surprised. Probably be in the double digits, maybe even triple digits of
Mm-hmm.
billions, right?
Yeah, there's actually companies dedicated to trying to recover these lost wallets, right? And I think they basically try to brute force the hash to unlock the wallet.
But the whole point was sort of like how it's
Unbreakable or or
yeah, because if they were able to do that, then the whole crypto, like the whole blockchain would fail, right?
yes, yes, and I don't know how successful these companies are, but if there's a demand, right? If there's a demand for people trying to recover their lost Bitcoin, you bet your ass there's gonna be a supply of people trying to cash in on that. So
Yeah, have you heard of the story of the man who I forgot how many bitcoins he had, but it was quite a bit, and his laptop was like somewhere in the landfills, and he went to the
I
landfills
think
and
I
they
have.
interviewed him at the landfills. Like, how do you feel to be here
I
trying to
remember
for your
there's a
laptop?
picture of that interview. It's very iconic, I think.
Yeah, with like $200 million worth of like bitcoins.
Insane,
Yeah, I was just talking to like Gordon and Ryan the other day. I'm like,
right?
even if you think you have a 1% chance of recovering that, right? That's worth $2 million, right? For $2 million, I wonder if you can literally hire a team of people to go to the
To
landfill
go to the landfill
to
and
look for
I
this,
mean, how
right?
much would you pay them?
I don't know, pay them $400 a day. I don't know. I don't know what the going rate is.
You're right. You're right. Yeah, that's a pretty good deal, I think, for both
Yeah.
parties.
Or if you really want to cheap out, you could offer them like a percentage of the bitcoins if you end up finding it. That aligns their incentives too, right?
Ooh. In fact, you can offer it to whoever finds it first to speed up the progress. It's gonna be like a rat race.
And then so yeah, I was listening to some podcasts and I kind of looked online at the Bitcoin price. And I was like, oh my God, like I bought it at the time for around 300 something Canadian dollars. And when I checked it, I think the zero point 0.8 of a Bitcoin was worth like, 40, $50,000 Canadian.
Hmm.
And then so I traced back my steps, looked for my receipts and like for when I first bought it, right? Because I bought it from a person like on local bitcoins, and so it had
Hmm.
like a receipt tied to it, which had my wallet at like the public key, I think,
Yeah, yeah.
right? And then using that, I was able to go on blockchain, like Explorer, whatever it's called, and like kind of see what happened and stuff. Yeah, but I cannot get it out.
Hmm.
But that made me really interesting. I think the technology, because at the time when I first bought that Bitcoin, I thought it's like heard they talked about being like a little bit mysterious, right? A little bit complicated, a little bit mysterious.
Sure, sure.
And I think everybody kind of looks at it and is like, I don't really understand. I don't know why this is value. This sounds really stupid or whatever, right? And they kind of give up. And that was my attitude back then. And seeing how much it's gone up made me think like maybe there is some legitimacy to this. And maybe I should learn about it because clearly it's very valuable to some people, right? To a lot of people. And so just decided to try to like listen to more podcasts, to learn about it, you know, watch videos, read the Ethereum white paper and stuff like that. And that made me, you know, I think for a long time I was like, okay, digital currency. I'm like, don't we already have that? Like, you know, when I withdraw from like the ATM, you know, how to carry a bank card and whatever, right? And then I think it made the one example that keeps popping to my head is like when I tried to transfer my TFSA from one bank into like a brokerage account, right? That took like 2 weeks process.
Right.
And I'm like, oh yeah, like that shouldn't be the case, right? Because technically you're just moving bits.
Yeah.
Right.
Sure.
And that made me start to think like, okay, there's some thing here, and also like the whole GameStop thing when people were talking about how, the like people I think were talking about like maybe counterfeit shares or something, and how, they were basically they were generating these shares out of thin air to short, and then settle it at a later date, right? So they don't actually need to find existing shares. They can even create it out of thin air and then just try to settle at a later time. This is something you can do with things that are fungible, right? And this I think was an argument even for like making stock ownership non-fungible. Right?
Okay.
So they can keep track of individual ones rather than, you know, just generating these things and then settling them in the back end at a later date. And the whole controversy around, you know, the DTCC doing the settling, but like they're also owned by the prime brokerages, and so like there's like conflict of interest and all this stuff, right? And it made me think like, okay, there is a lot of potential here, but I think the more I learned about it, there's also a lot of like problems with it. So there's a lot of upside. So I put a little bit of money invested into it, and we'll kind of just see where it goes.
TLDR, now you're a millionaire, and
TLDR, I've lost some money.
but TLDR, I like this coin. Yeah, well put. I mean, I think that's very natural way to come about the topic of Bitcoin. I think a lot of people who are interested did come about it that way as well, mostly from word of mouth or seeing how successful it's become, right? But yeah, let's jump into, I guess, why Bitcoin is the de facto number one crypto. I mean, there's obviously thousands of coins, and pretty much anyone can make their own coin with a little bit of work if they know the technology behind it. And I would argue, and I think you would make the same argument, that Bitcoin is by no means the most efficient cryptocurrency when it comes to settling transactions, because it's not very fast, right? You do have to go through the whole chain every time to create a new block, and obviously that does not scale well the longer that it's in running. And there's also what the amount of transactions on a block, I forget the exact number, but it's not that high relative to other coins, right? So despite that, Bitcoin is obviously the most well-known and popular coin and the most successful. Do you think it's just a matter of it being first to market and having that brand recognition in that sense, where everybody associates cryptocurrency with Bitcoin? So if they're going to get into it, they're most likely going to stick with what's most popular, right? What's most known.
My understanding of it.
Sorry, you cut out a little in the beginning. You want to...
Oh, sorry, yeah. So that seems to be my understanding of it, that like, yeah, it's like the first one to move, and so it has some legitimacy through that, right? Like it is the one that got the ball rolling and a lot of people on it. And so when we talk about Bitcoin as a store of value, right? The store of value part just comes from people believing that is a store of value, right? That it is valuable. And so in that sense, I think having something like, being the first mover, right? Being the main one, being the one that everyone knows about has a lot of value. It's kind of like when we talk about art, for example, art having value, right? Like sometimes it's based off like historical significance even, right? Or gold, right? Like historical significance. And so I can see for a store of value argument why Bitcoin wins out against the other coins, right? Because it is the one with the reputation. And I think the longer that it holds that reputation, the more it gets cemented, right? And so it's like a network effect. And right now, it's the biggest one, right? And I think it's only going to get bigger, similar to how the social media companies, right? Like, Facebook gets really big, and even if you create a new platform that you can argue has some technological advantages over Facebook, it'd be really hard for it to get as big as Facebook now, right? Because you'd have to draw users away, and like, why would the users go to your platform when their friends are not on your platform, right? You have to reach a critical mass.
Yes.
It's just so difficult to build at this point.
Yeah.
I can see that with the other coins. They're all trying, right? And I think the good thing is that the other coins can market themselves not based on this sort of value argument, but based on their technology argument, right? And so in a way, I think they're more competing against Ethereum rather than against Bitcoin. Because like you said, Bitcoin has that problem with like the blockchain size, the block size, and the what's the other thing? I guess the block size is really the big problem, right?
I guess block size, and I think every coin, or I don't know if that's the case, but my understanding would be every coin has that same problem of going through the entire chain, right? So I don't think that's a problem unique to Bitcoin, but if Ethereum has some efficiencies that could be made there, then that's an argument for that.
Yeah, I mean, I don't understand the technology super well. I'm not a computer scientist like you.
You're not a nerd.
But I think, I've heard about like the Merkle tree stuff, right? And I think I've heard that some alternative cryptocurrencies do not actually store the entire chain, and they kind of look for these shortcuts. But the problem with that is the entire chain still has to be stored somewhere, and so it becomes less decentralized.
Right.
So you have centralized places where they store the entire chain, and everyone else kind of runs, sections of that tree, right, in order to verify the block. But this obviously makes it less decentralized. That's the problem.
Right, makes you more reliant on those running the critical sections. Yeah,
exactly. Right. So that may just be a decentralized blockchain problem. I mean, not that well.
Yeah, I think that's just one of the natural drawbacks of attempting to be decentralized is you have to make sure everyone has equal footing, and that takes more resources, obviously, than just accepting, one central source of truth as the authoritative fact. Right?
Yeah, and the centralization thing. There's another problem, right? Which is like, I think they're saying that it's like Bitcoin is susceptible, like a proof of work is susceptible to like the 51% attack, where basically if you have 51% of the miners colluding, then they can basically force the chain ahead, right?
Have you ever watched Silicon Valley, by the way?
No, I haven't. Oh, Silicon Valley, right?
Yeah,
I watched a bit of it.
They actually bring in the 51% attack thing as a plot point in one of the season finales. And their technology at the time was a distributed internet, which they don't explain the technology behind it, but it's definitely similar to crypto, where they had to have a critical mass of users download and use the app in order to generate the signals enough to create this like free and actually decentralized internet. But then so one of the plot points was the Chinese guy, the Chinese roommate, like what was his name, Jin Yang? Yeah, he like steals the technology, brings it to China, and then they start like mass producing fake users to try to take over the network. And Yeah, it was actually really funny. I appreciate that
Yeah,
show
I
for.
mean that's based on reality, kind of, right? Like a
Yes.
bunch of the miners are in China, and
Oh yeah,
they
actually you're right.
decentralize this, right? So like if you
Mm-hmm.
have a mining pool, right? Like let's say you have a mining pool in the US. All these people are like they kind of agree to be in that pool, but they're all individuals, right?
Yeah.
But a mining pool in China can just
Can
be
be a unified, yeah, single entity.
yeah.
That's
So
true.
they can create their chains all the same, right?
I actually didn't realize that. Is that a common issue that's been brought up regarding Bitcoin?
Uh, I think so.
Because I would imagine that would be a pretty big talking point. I feel like.
Yeah, because the whole point of uh, Bitcoin is sort of being decentralized, right? But if all the mining is happening in China, right? Like if they get to the critical mass, then even if they don't, right? Even if, let's say one person controls 20% of the mining, that's not centralized. That's
Mm-hmm.
not decentralized anymore,
Yeah,
right?
that's true.
I think that is a very valid criticism. Again, like just based on what I know. Um, and if you think about it, like how much does it cost to like get a mining rig, right? Like it does cost some money,
It does.
right? And then to participate in a mining pool. So there is a barrier to entry, right? So at the end of the day, the mining takes up resources. And then so the resources, so then if there's centralization of resource, then there is centralization of the blockchain, right?
Mm-hmm.
Yeah, very, very interesting. Uh, I think like sort of like a weakness, maybe.
Yeah, sure. Vulnerability, if you will.
Yeah, but they are. I think Ethereum has or is planning on moving to like proof of stake, which is a bit different. But again, that one is also seems to be like around the resource. So it's like rather than mining. So you saw the video I sent you, right?
Mm-hmm.
And then they talk about proof of work and how that
Yeah,
works,
I
right?
actually, yeah, the project that I worked on. I remember that proof of work function very vividly because that was the one piece of code they provided to us. It was like you implement the proof of work function based on this, and it was just a bunch of like mathematical operations and bit manipulations, and you were like, okay, and it's like a magic black box function that spits out the hash you needed to verify the block. So,
Do you wanna yeah, do you wanna talk about your project actually, real quick?
yeah, we can talk about that I guess real quick before we dive into the technology of I guess the real coins. But yeah, so that project I worked on was for this course in distributed systems. And it was essentially a blockchain project where we had to create a blockchain, and um, each block could hold, I forget how many records, it was a small amount, but each record could do one of, I think, three things. You could create a file, or in this case, a record, um, delete it, or edit it, right? And so through this, you create essentially a very basic file system of text files, essentially, right? Um, and yeah, it was honestly a pain in the ass. Like, probably the hardest thing I've ever worked on. This course is very hands off, so all the lectures were optional. They're just there to explain things conceptually, and the projects is where you would basically spend your days, right? And they give you basically the basic requirements, but they don't give you pretty much any starter code. They just tell you like, use this language, and you must do this, and that was it. And it's just very much more like real life, right? Like in the workforce, you're just given a set of requirements, and it's up to you to scope it out and figure out the technical design required and implement it. And so yeah, that's what we did. And I remember we got this thing working on a Friday night at 2 a.m. and that was the happiest moment of our life that year, man. Me and partner, we fucking cried. We actually were delirious, I think, from being so tired. We just started cackling like maniacally when it started working. Like we were in shock. But yeah. So what I remember from this project, what I would take away from it is I thought, wow, blockchain technology is so inefficient. Like it's a it's actually garbage. That's what I thought. I was like, why would you want to go through the entire chain to do a very simple transaction, right? But I was thinking about this from a computational, from an efficiency perspective. I wasn't thinking about it from the argument of having a decentralized, well, anything, right? Which has huge, immense value in real world application, right? And that's the trade off we make. Um, we have to make this computationally expensive in order to achieve this decentralization, in order to not rely on one central source that could be compromised or could be biased or could have its own um, agenda whatsoever, right? So yeah, I think I won't get into the nitty gritty details of how it works. I think we can link that video that you sent me in the YouTube for this if people want to get more into it. I think that does a better job of explaining it than we could. Um, but yeah, I think one big concern I would have for blockchain technology and in general is just it doesn't necessarily scale, right? Getting a new or mining a new coin, mining a new block will take longer the longer the chain it has been around, right? The chain gets longer, so you have to go through more blocks. And I don't know enough about the technology to know if that problem is mitigated or if it's just assumed to be not an issue. But that's what I would see from I guess a computer science perspective is the potential issue long term with this.
Yeah, I think what I've heard, and I think this was in the video too, was that they set the difficulty of mining each new block every 10 minutes, and I think that's and they set it so that um, based on I guess how much computing, how difficult the previous block was, and how long the previous blocks took to mine, I think they reset the difficulty every time a new block is mined to make it so that a new block is created every 10 minutes or something like that.
Interesting. Oh, was that the end of the video? I might might not have seen that part. Interesting.
What I think it's the video I linked to you. I think they might have mentioned that, like, remember with the SHA 256
Yeah, that's
encryption.
the standard cryptographic algorithm that basically everything uses.
Yeah, how it outputs that, like, 256 digit string,
Hmm.
and then how they set the number of zeros at the beginning, and I think they set it based for each new block based on how long it took the last block to mine.
I see.
Right.
Oh, okay.
So it might be set at, like, let's say 100 zeros, and then they were like, oh, this took way too long. The next time we gotta set it lower. So I think they're adjusting it.
Oh, I see what you mean. Yeah, yeah. So, okay, I get that, and that we actually implemented the proof of work function the same way. And I remember now the part of the proof of work function to calculate that hash or that string that has like X number of zeros, it's actually just brute force. You just plus one to the input until you reach that number. So that's why lowering the amount of zeros would make it faster, right? You
Yeah,
would
I think the whole point was there was no shortcut in cracking this. It's
right.
that
So
you had to.
yeah, so you have to brute force it. Um, what I was referring to was just I don't think that solves the issue of going through the whole chain, right?
Yeah, no. I think what I was trying to answer was you were saying that it's taking longer. I don't think it takes longer. It just becomes more computationally expensive,
That's fair. That's fair. Yeah.
right? Yeah. Um,
So
and yeah, that is a big problem. I
that
think.
in itself is a problem if we're trying to achieve true decentralization because it's an artificial not an artificial it is a real constraint on people who are eligible to be miners, right? If you make it difficult and expensive to be a miner, then only a subset of people will be able to mine, and from that point it's easier to I guess reach that issue we talked about of you know a certain group acting together and compromising the chain, potentially, I guess.
Yeah, I think actually most of the mining right now occurs in pools.
Mm-hmm.
So people pool their resources together to mine together, and
I
then
see.
they distribute their earnings, proportionally to uh, how much processing power you're offering.
Mm-hmm. So we're
Um,
already beginning to see kind of centralization within the
yeah, so it's
ecosystem.
not decentralized.
Yeah,
Yeah,
that's
I think
super
I saw a
interesting.
graph where it was like these big pools. I think one pool was like 20% of all mining activity. Another pool is another 20% of all mining activity, and I think you throw China in, there's like another 20%.
Right.
Right?
So
Like,
if a few of these larger pools just join forces, then it actually is pretty realistic to compromise the chain and create like make a fork the prime branch.
yeah, I think I saw that. Like, I think I saw a video where they literally pointed out like the two biggest pools. If you just put them together, they were the majority.
Oh shit. So we're pretty close to that
Yeah,
situation
I think
already.
the problem though is the moment they do that, like, and people realize it's it's Bitcoin loses all value, right? Like
Hmm.
their blockchain loses all value, right?
That's true.
The ledger that they have loses all value because people don't trust it anymore,
Mm. That's fair. That's fair.
right? I think that's one thing that's one kind of way to combat this is because Bitcoin is so transparent, right? I feel like, and again, like I don't know the technology that well, but like I feel like because it's so transparent, you can see when this happens, right? I think you're probably able to read, through the network that uh, there's so many competing ledgers out there, right? Like you as a node maybe receive. Yeah, that's one thing. I don't really understand the network part of this that well.
Hmm.
So in my head, I'm trying to think like how is this information distributed, right? Like let's
I
say
can, yeah,
I
maybe give you a explanation from the CS point of view
yeah
if that would
yeah.
help.
Can you give me from the beginning, sort of like let's say I decide to send someone something,
Hmm.
right? A big point, right? Like first of all, how do I do that? And then like so how do I then broadcast that to the blockchain?
Hmm. So okay, so I'll describe to you the first project I had in that course, which is the project before the blockchain project. And as it turns out, it was a precursor for the blockchain technology. But at first, I didn't realize that because the project was as follows, right? We just had to build a simple network with the protocol of you had these different nodes in the network, right? And you're trying to discover all the other nodes within the network. And so you start beaconing. Any node can beacon, and any node can receive other broadcasts, right? So this node starts beaconing its position. It's that it's a node. It exists, right? And the moment another node receives that beacon, it acknowledges it and it updates its internal record to say, hey, there's a node in this area, and then it rebroadcasts that to every other node that it's aware of in the network. And then so that creates a ripple effect of like the moment that this one node broadcasts something, it's going out to all the nodes that it knows, and then that node is going receives it and gives it to all the nodes that it knows, and in this way, the entire network is mapped out eventually, right? And so this is kind of similar to how the blockchain broadcasting works, right? You have these miners in the network, and okay, so I don't know how the network part communicates, but I assume like when you download the ledger and start mining, there's some protocol that you communicate with other miners, right? And I assume that you can maybe modify that to be in a pool. I didn't really understand how that shared resource mining works, but it sounds like you can kind of coordinate your mining efforts across different individual hosts, right, within the subnetwork. But basically, the moment that a miner mines a block and verifies it and generates the block hash, it sends that out to all the other miners it's aware of, right? And then that same thing happens. But before those other miners would rebroadcast that block, they would have to first do the proof of work and verify that it's legit, right? So um, that's the only minor difference between that and I guess the project I did. But yeah, does that kind of help you
Yeah,
make
and so
sense
the
of it better?
verification part is sort of like, how do they do the verification of the proof of work again? I'm forgetting from the video.
Mm, so the way that I guess we it would implement it was you get the block hash from you receive the a block hash from another miner in the network, and then you pass it into the proof of work function. Um, oh, sorry, no. What happens is you place that block onto your chain, right?
Right.
And then you calculate the hash manually with your proof of work function, and then you compare if that hash is the same as the one that you received, and that's how you validate it.
Right. And then okay. Yeah, yeah. Okay. I think I
Yeah.
understand.
Yeah, so I think that's how the Bitcoin verification works as well. Or sorry, blockchain for Bitcoin works as well. And I assume that's probably true for a lot of other coins. Though I think, this is the part where coins, like, you can get creative, I think, with the security aspect, right? And there's probably some optimizations you can do um, to make verifying faster.
Yeah, and I think Ethereum is kind of moving away from the proof of work, and they're
Right.
now doing something called proof of stake.
Yeah, yeah.
And again, like I don't understand that well, but it seems like essentially what you do is you put a certain amount of your Ethereum into, I guess you can call it a pool, right, for staking. And then the network or the blockchain, I don't know who gets to choose this, but the protocol, I guess, chooses um, maybe one coin or something, or maybe one. They somehow, I guess, select a winner, right? It's
Mm-hmm.
like a lottery pool, right? Like you're basically buying it's almost like buying raffle tickets, right?
Mm-hmm.
Uh, and the winner then gets to put on the next block, and they get paid for that,
Mm, I see.
putting on that next block. The problem with this is obviously the richer you are in theory, like in ETH, the more chance you have of winning this draw, right?
Yes.
I don't know exactly how they're fixing that, but I've heard that they found a way to fix it. But it seems like a big problem of
The rich get richer.
the rich gets richer. Yeah,
Yeah. Yeah. That is interesting. Wow. People are very smart. I think coming up with these protocols. Yeah.
yeah. And I think the benefit of this, I guess, the advantage of this is that you're not wasting computing power to like brute force the hash, right?
Mhm. Mhm.
And then like artificially making the hash hard to crack just to maintain the proof of work, right?
Yeah. Yeah. Makes sense. If they actually could fix that potential issue of, um, yeah, if you having more coins equals having more chance. That seems pretty interesting. Yeah, I wonder how they can do that.
Yeah, so I guess we can kind of pivot from Bitcoin now
Mm-hmm.
to like Ethereum.
Yes, yes.
Um, and so the way I kind of understand it is that Bitcoin is the store of value argument, and that's why it's so dumb. Like meaning that like the transaction, like the block size is so small, right? Like because you're not using this as a currency, so you should not need the capacity of like a Visa or Mastercard, right?
Sure.
Because you shouldn't see that much transactions. These are like gold vaults, right? Um, and then Ethereum is more, it seems to be less about the store of value argument, which is good because I think if multiple coins make the store of value argument, they're going. I feel like you cannot have that many winners, right? Like what differentiates them, right? I
Yeah.
feel like you just have one winner, which would be Bitcoin. So Ethereum seems to be more about setting up a decentralized computing network. So the way I understand it is sort of like at one point in my undergrad, I think I learned about the von Neumann architecture, like for computers.
Sounds
But
a little
basically, I
familiar.
think it's just like how a computer is like, it's got like a memory, and it's got like a processor, sort of, right? And so what the computer is doing is basically just the processor is changing the states in the memory, right? And that's the computing that's happening. So when I think about it, it's like the ledger itself contains the states, right? So the ledger itself is the hard drive, it's the
Okay.
memory, and then the processing happens at individual computer nodes. So basically, from what I understand, um, the difference from Bitcoin is that Bitcoin's ledger is essentially just writing down transactions. In this, I think it also has a place for you to put information I guess just any information, right, for computing purposes.
I
So
see.
this, I guess, is sort of like the blockchain that you made, right, where you can write to a file, right? You can read from a file,
Mm-hmm.
something like that.
Interesting. So, okay, so sounds like it's more flexible in what transactions it can actually do, and therefore allows for optimizations uh, in computation resource, and that's what makes it more attractive as a transactional currency. Is that correct?
I think the idea is that it's not going to really be its main focus isn't on well, I guess transaction is a huge part of it, but I think
Mm-hmm.
they want it to be a programmable coin.
Hmm. Okay. Yeah, I think I'm probably not wrapping my head around it entirely. So, would you is smart contract is an example of the application of the potential here? Is that right?
Yeah, I think so. I
Okay.
think smart contracts can't exist on the Bitcoin.
Do you want to explain that real
Right.
quick, and hopefully that'll help me get a better understanding
I
of.
could try, man. Like,
I'm setting
yeah,
you up right here, but.
honestly, it's been hard for me to wrap my head around too.
Hmm.
And so
Damn,
I'll give
we
you
are
a
not as smart as we thought, as it turns out.
try, as it turns
This
out.
is that episode where we need to bring in a guest. It's like this person has studied Bitcoin and blockchain for the past 30 years, even though the technology's been
Yeah, I
around
mean,
for less than that.
because our previous episodes have been on things that we mostly knew about,
Yeah,
right?
yeah. So this is definitely we're venturing into unknown fields, and we might be making fools of ourselves.
Yeah, yeah. But I think it's a good process maybe to go through,
For
even if
sure.
it's just to learn.
Yeah.
And so with Ethereum, yeah, I think at the very basic level, it's just it has extra fields on the block. So you're not only putting information about like, let's say Alice sends this amount of Bitcoin to Bob, right? You can also, I think, attach a string to it. And that string may be used to execute some code or something at a different node, I think.
Okay,
Um,
I see.
and I think the way I understand it is that you can say like, I will do X processing, X computing function for you, right? And then what you do is you send me in that ledger, in your block, I think they call it gas. It's like the currency that they use.
Okay.
I'm not sure how that differs from like ETH. Maybe it's the same thing. But then they send along with that transaction, I guess, a string. Let me think about this. Let's talk about your like what you did for the file thing, because I think that could be an example of this, right? So do you think it's possible, let's say the file thing that you created, because there is a coin I think called Filecoin that's essentially like a decentralized Dropbox.
Yeah, I think that's what we try to create basically.
Yeah, so
Yeah.
so I think if you explain that, maybe like it becomes clear for us. So like, do you
Maybe.
think it's possible to add on a layer of, transaction fees and stuff onto what you guys created? Meaning that you can ask someone to store the file for you by paying them in the cryptocurrency of that platform.
Yes, certainly you could. You would have to change some of the system for sure. Because it sounds to me like the biggest difference here is you could have individual nodes behaving differently from others based on the um, request you got from the block, I guess.
Yeah, I think that's the way I
So
understand it, is that the code that you're running isn't on the blockchain. The code is actually local,
local to the
but you
machine.
request someone to kind of execute it for you.
Okay. I'm trying to think about. Okay, so that's definitely doable. Um, yes, that is very doable. In fact, I'm wondering why Bitcoin cannot do it.
I think they just they just didn't program it into it. I think they
Okay.
didn't see that as like the need, I guess.
Okay. That's fair.
And I'm sure there was like, because Bitcoin is like pretty much open source, right? I'm sure people argued over whether or not to create a version of Bitcoin like that, or to make Bitcoin like that, right? To turn Bitcoin to Ethereum, and it feels like basically the argument was won by the side that, valued the store of value argument.
Right. Or maybe, because I guess in a way, allowing this kind of function somewhat violates the decentralization protocol because you can have different nodes acting independently of others.
Right.
So maybe Bitcoin really wanted to adhere to that whole concept because I feel like that was a big motivator for this technology, right? Is breaking away from centralized or breaking away from the potential of, I don't know, centralized actors. Um, I don't know if that argument really applies, but maybe they just didn't think about it, you know? But yeah, let's talk about the, I guess, applications of smart contracts then. Let's talk about like how they can be used, because I think that's what's more important anyways.
Yeah, well, it seems like the biggest thing right now are the NFTs,
Mm-hmm. Yeah, let's get into
right?
that.
Yeah, so do you know how NFTs work?
Somewhat from like a
Yeah,
Planet
can you?
Money episode.
Okay, can you try giving an explanation?
Oh boy. Um, yeah, so you brought up the term fungible and non fungible before, right? So
Right.
yeah, let's quickly define that real quick. So yeah, fungible. Um, see, I think I'm gonna get it mixed up. Fungible means that something can be
The
copied,
money's,
can be
yeah.
duplicated, right? Like paper currency. So non fungible
Like
means
two different units of that money are interchangeable.
equivalent. Okay, yes, there we go.
Yeah.
Yeah, they're essentially the same, right? Equivalent in all ways. And so non fungible is the opposite, where one copy of it is unique, and um, basically there is proof that it is the unique and original source, right? And we can use this to differentiate digital art from the like the original versus the the copies, because I guess one problem with digital art has always been how do you monetize this, because anyone can just copy a JPEG or a PNG file or whatever, right? And you can just redistribute it infinitely. There's no value in selling digital art when it can be copied and it's literally the same bits, ones and zeros. And so the appeal of NFTs is it has this ability uh, to make a piece of art, or to make a digital file, I guess, non fungible, right? Um, I don't exactly know the technology underlying behind it, but I assume there's some kind of cryptographic hash that is unique to that first file, and all copies of it are not able to replicate that hash. And I assume this hash is either public or on the Ethereum platform and can be verified that it's the original. Um, does that sound about right?
Yeah, I think that sounds exactly like how it ought to work.
Yeah.
Man, this episode is a lot of I assume.
I love it.
Oh no,
Yo, you know what would be great though is if we actually got some blockchain Bitcoin enthusiasts who come in and start commenting and like, no, this is all wrong, and getting heated up and generating discussion. Is that would be cool, you know. So
yeah,
please educate us if we're wrong. Comment, let us know if we're being idiots, you know.
oh man, this is the whole media problem, right? Like you get more clicks by just posting stupid stuff.
Yeah, that's right, man. If people get riled up talking about us, dude, it's good for business, baby. We just gotta start saying dumb stuff and making that the title of the podcast. Like every time, every new podcast, we just have a little like quote that's looks super clickbaity and dumb, like death to all traditional banks, you know. But yeah.
Yeah. So that seems like a pretty good like application for it. I think
Hmm.
there were people were talking about putting like land deeds on a blockchain,
Okay. Okay.
and this way you can kind of verify ownership of land, right? And then
Mm.
they would then tokenize it even more, so they would fractionalize it. So now you can invest in like let's say a quarter of this lot of land, right?
Okay.
It becomes a way to invest. Like I guess it's a way to financialize uh, assets.
So could you not do that with a centralized bookkeeping? I mean, in
Yeah,
specifically land keeping.
I think deeds cannot be split like that, right? Like,
Really?
or at the very least, it'd be very difficult. I think it's possible. Like, definitely, I think it's possible, right?
Mm.
I think the problem is that you need lawyers to get involved. You need like these lengthy contracts. You probably need to rewrite the contract every time you add someone. But it'd be very difficult to uh, invest in it. Like I've heard, like, have you heard of REITs? Like real estate.
REITs, yeah.
Yeah, I don't remember what it exactly stands for, but I've heard that it doesn't do this exact function.
Okay.
That you cannot fractionalize it that
Mm.
well.
Interesting.
Or maybe I think you can fractionalize it, but you cannot. Mm, it doesn't represent ownership of the actual land, I guess.
So I guess land is different from property, right? You're talking about the actual physical space on the ground.
I think so. I think it'd be very difficult to do this for property, right? Like it's like I have this part of the bathroom. Like I think that's really tough to do.
Okay. I mean, I guess I'm thinking of like property like a public venue, like I know Madison Square Garden is publicly owned, I think,
Mm,
for example. So I'm thinking of like a property that's able to generate revenue, and you know you can invest from that perspective. But that's
right, right,
essentially a
right.
business.
So yeah, so I think that's doable. Like I mean, you could even put like stock ownership onto a blockchain, right? Like the way we
Yeah.
talked before,
Yeah.
how like there's this the system is so opaque, right? If you put it on blockchain, you make it transparent, and also if you
True.
make it non-fungible, you can keep track of all the shares a lot better, right? So you know if anything stupid is happening.
That does seem like a good application of blockchain actually. And also why it'll never happen is it makes too much sense.
Yeah, it seems like blockchain is really coming for the financial sector. Um,
Hmm.
because I guess the financial sector just works with numbers, right, mostly.
Hmm.
And so this is just a better way to do bookkeeping, it seems. So yeah, so some applications, the NFTs, maybe putting like real estate onto a ledger, Filecoin, right? Like Dropbox, decentralized Dropbox, basically.
Sure.
So you can pay someone, like so. I guess every time you send a file for them to store, you would then send along in that block some like ETH to pay for it, right? Um,
Why is that better than so I guess it's the argument is you can reach cheaper rates because you
I
have
think
like
it's
a
a decentralized aspect of it. I think it's more that no one person has all of your files because
okay.
you can send all of this to different people, right?
I see, yeah.
Yeah.
Yeah,
Um,
okay, that makes sense actually.
yeah, and it's
And you
like
could probably they could probably implement it in a way where you actually have different bits of your file across different individual hosts, and that makes
yeah,
it so no one can hack you and get or hack a host and get even one file.
yeah, and it's also encrypted already, right?
Mm-hmm.
So I mean, even if it were hacked, if they would have a hard time reading it,
True.
right, without your key.
True. Yeah. Good
Yeah.
luck reading my nudes, hackers. But yeah.
What was I going to? I think one. This kind of brings to well, I don't think this is a natural transition, but I think this brings to another thought I was having
Mm-hmm.
about this, which was because it's decentralized, it's hard to recover, right? So we had that problem with me where I have, in terms of paper money, I have or digital money, I have how much like something like 30 grand out there floating in cyberspace, right? And
Yeah.
I can never get that back, right? If I lost the password to my bank account, right, I could just call the bank and I'll ask them. I
Yeah.
can't do this with the blockchain, right? So that seems to be an issue. And so, like, how do I solve that, right? I actually don't know the answer to that. Can you think of anything?
Like aside from just keeping track of your
Yeah,
just
so how
wallet
do
and
you keep
password
track of that,
essentially.
right? Like I've heard of like different ideas, right? One is to have a hardware wallet.
Mm-hmm.
So essentially, I don't understand that very well, but I guess essentially you're storing it in like a USB stick or a hard drive, right? You can lose that shit, right? It can become corrupted. That's kind of my worry about it. I've heard you can also, print it out, right? So you have a paper wallet, right? Or like, let's say even like engrave it into metal or something, right? Into a card that you carry
Get a
around.
tattoo of it.
Okay, yeah, a tattoo of it. I didn't think of that actually.
I'm kidding.
Um,
But
that's interesting. I guess you have a hard time losing that, but it's pretty public. I guess you're never going swimming unless you tattoo it, you know.
Wait, well, just put it on your junk, you know?
Near
That way
your
it's not
feet. Yeah.
public, and whoever reads it, you at least hopefully you trust them a little bit.
Never have sex with anyone you don't know ever again.
Yeah, exactly. It'll encourage you to make better life choices in general. You know? Like, dude, there's something there.
You have a whole new industry of like
The only thing you cannot do is start an OnlyFans after that.
you have a new whole industry of escorts just trying to get your your keys.
It's like the $1 billion Bitcoin dick man. Everyone's trying to get him to pull down his pants to become rich. Nah.
Right? And so like that again, like, I can lose the piece of paper, it can get destroyed somehow. If it's on like a metal engraving, well, that's even worse because, that's like carrying around my credit card and like I can lose my credit card, right? And now,
Mm-hmm.
but now it's the credit card where the moment you have access to it, you can use it any way that you want. And it's, no one can do anything about it,
Yeah.
right?
Yeah.
And like, so the other argument seems to be like, have someone else hold your keys for you. And I'm like, well, that removes the decentralized aspect, and you're paying a fee for it, right?
Yep.
And the other aspect I've heard was like, you encrypt it yourself, on like somehow. Um, but again, like more layers of encryption seems to just be uh, making it more difficult for you to access it too, right? That you're more likely to forget, right? Let's say you encrypt it somehow. If you forget the key or password to that encryption, you have another problem, right? And, I think I've heard that you can like split it out so you can like have like 10 paper wallets, right? Or 10 hardware wallets distributed, right? But that's really hard to keep track of once again. So it seems to have this like it seems to come with decentralization that there's this problem of like how do I actually hold it? So, I hold it in Coinbase,
Mm-hmm.
but like that defeats the whole decentralized aspect of it, right?
Yes. Yes.
Yeah.
But that's how most people are interacting with crypto right now, right? It's through a platform which is centralized, right? But that I think that's the thing about decentralized is as a concept it works so beautifully when you pitch it. But in practice, people don't want to be responsible for a lot of things, right? We pay money out of our pocket to remove these burdens from ourselves for a lot of things in general, right? That's why these institutions exist. Technically, you could um, homeschool your kids like everything and they will be super sufficient, right? But we don't want to spend the time to do that. So we pay tons of money to schools to, do that for us. Um, and then there's like, the level above is like you can pay for luxuries that or like for things that maybe you would people other people would do but you just don't want to do like nannies or butlers or like chefs, I guess, right? Like um we are constantly adding layers of convenience to our lives, and being decentralized means going the other way, right? Like becoming more responsible for these things. And I feel like we as people are just not equipped to deal with that kind of responsibility. You know, like there is no system right now that's adequate for the problem you described, in my opinion, because it's like as easy as losing a credit card, except if you lose it, that's your whole like that's it, right? That's everything you
Yeah,
own.
there's no customer service to call.
Yeah, like you
To
can't.
call.
There's no like you can't get it back. Exactly, like right. You can't just roll it back. So yeah, that is really scary. And I think there's not a lot of good. They all have drawbacks, right? Like you can store it physically on your machine. That's prone to it breaking. Obviously, if you store it on the cloud, it's prone to being hacked. If you store it physically, period, it's prone to being lost and stolen. So yeah, there's a lot of drawbacks to each of these methods. Um, a little unrelated, but I've been a big fan of biometrics recently in terms of um, verification, and I wonder if we'll ever get to the point where that can be used to verify your wallet, like in a very seamless way. Because we're okay, right? Like, I guess what I'm referring to is, being able to use fingerprint or iris scanning to unlock your phone or your laptop. Um,
So are those things like I don't know how reliable those things are right now. Like how good are they? I'm thinking like
so
we just had a neuroscience like neurology block recently, right? So we
mhm.
learned about the eye a little bit as part of that. I'm just thinking, man, I'm like, there's so many diseases that can happen to your iris. Like,
Really, um, I don't know the exact numbers on how accurate it is, but I can give you some anecdotes. Like, I do have a friend who let me think. So Apple doesn't use iris; they use facial scan to unlock, right? And so during the pandemic, you have to wear masks. So she would have her mask on, but it would still unlock the phone like every time with her mask on. It never worked for me though, so it does seem like individually it could have some problems in terms of accuracy. Um, and I don't know what's the most accurate method. I imagine probably fingerprint would be most accurate if I had to guess.
mm,
Um, but I think the biggest problem from a technology perspective is these things work locally on your device, but how are you supposed
yeah.
to do that digitally? How can you verify your identity anywhere digitally and access your wallet, right? Um, I don't think the technology is there for that right now.
Yeah, like the verification, like your fingerprint would have to be stored somewhere.
Yes, yeah. So
Whether it's
it would
locally.
essentially have to be in the cloud somewhere to verify, right, for that to work. And
Well, I mean, I think it can be verified locally, right? To like on your phones, have your fingerprint stored on your phone, and then when you press it, it verifies, and then it,
oh, okay. So you're saying yeah,
gives
okay,
you the
you can
key so you
verify
can
locally and
access.
you can send the acknowledgement to the cloud.
Yeah,
I'm afraid
yeah,
of that being vulnerable to hacking. Oh, I guess if you anything is vulnerable to hacking, I guess when you break it down at this level. Yeah.
yeah. I mean, that just then becomes another layer of authentication, another layer of like encryption. I was talking about that like complicates things, can make it
Yeah.
even more difficult. I mean, in this way, you're essentially converting your key to your fingerprint, which is I think a lot more accessible. Like it's you know how to remember this, but then if you store that fingerprint locally and you lose your phone, well now you've got the same problem as before, right? Or the phone becomes
Yeah.
corrupted, you've got the exact same problem.
True.
Yeah.
So it has to be stored digitally.
And then so if it's stored on the cloud, okay, well now you got the
Same
centralization
problem once
problem.
again. Yeah. Yeah.
Yeah, I just don't know how you fix
I
this.
think those Bill Gates 5G chips are probably the way to go, man.
You mean the stacks?
Yeah, yeah, dude. The stacks.
Digital human freight?
Oh yeah,
Big shot.
monetize s- life living. Yeah.
Hmm.
Mm.
So yeah, I guess those are some of the like applications I've heard about. I've heard about things about like creating like a decentralized government and all this crazy stuff.
I guess
Like
the whole concept of decentralized platforms really resonates with anarchists or people who.
libertarians.
Yeah, okay, there you go. Libertarians. That's a good, yeah. Yeah. I
Yeah.
could see Ron Swanson being a big advocate for cryptocurrency if he had any understanding of technology.
um. Yeah. So hmm, awkward pause. What I
Dogecoin?
think. We can talk about Dogecoin.
I know nothing about Dogecoin, by the way. I have no idea. Like all I hear about it is from my friends. Like, yo, did you see Dogecoin today? Like,
Have you seen how much it's gone up though?
yeah, I mean, after people talked about it, and I have no idea what was the cause behind it. I have no idea if it is sustainable, if it's gonna crash. If you know
Yeah.
anything, you already know more than me.
I mean, I know it's gone up by a tremendous amount within, I think, roughly like the last month.
Couple
Uh,
months or so. Yeah, I first heard about it around like January or February.
yeah, I
I
mean,
mean, I first heard about it years ago, but like it started blowing up very recent. Excuse me.
yeah, I mean, Elon Musk has been like tweeting about this thing for so long, right? But then for some reason, like roughly around like the first second week of April, it just like skyrocketed. I think
Exploded.
from yeah, um,
All
and a
right.
lot of people made a lot of money off of it.
I'm not gonna look it up
I
because it'll affect the recording the stream. But then yeah, you can
yeah,
tell me.
yeah. From what I've heard, that it's what people call shitcoin, meaning that like it doesn't have like the underlying technology to kind of make it worth anything. So we talked about like the two ways for these cryptocurrencies to have value, right? One's the store of value argument. I think that only really applies to Bitcoin.
Mm-hmm.
The other one, I
The
guess there are
tech
three ways really if we think about it, if we want to include those ones. There are three ways, right? There's the store of value, there's a technology component, and then there's
hype
the meme
meme.
component.
Yeah.
Yeah, and so this falls squarely within the meme component because it has no scarcity because I think they can increase supply however they want, right? So
Okay.
there's no scarcity.
Mm-hmm.
So that definitely defeats the store of value argument, right? And
Doesn't
I've heard that it has no technology that helps to differentiate it.
so okay. My question is, if you can generate a infinite supply of this one thing, doesn't that mean it's worthless by default?
I mean, you can think of it the same way as maybe it doesn't create infinite supply. Maybe it cannot be created like willy nilly, but
Or
like
is it
it
like the
more supply.
theoretically there's no upper bound, but you still have
Yeah,
to
like
mine coins right now?
we know that Bitcoin reaches an asymptote, right? Because
Right.
it
Because there's a
midway through the
half-life
half.
every 4 years or whatever.
Yeah, so it reaches an asymptote of around like 21 million coins. This one doesn't have that. I think it's like a linear supply.
Okay.
Uh,
So there's still there's still constraint in the sense that like people are mining it, but theoretically there's no upper bound. So the longer it's in circulation, it should be facing a good amount of deflation. Oh, sorry, inflation.
yeah, like it should be inflating.
Hmm.
Uh, but obviously the way it's going up, it's
Obviously,
more than
the hype
inflation.
is outpacing the rate of inflation, right? But yeah, so that's interesting. So basically, you're saying there's nothing that stands out about this coin aside from the fact that it is so memeable.
I think so. Like that's my understanding of
Hmm.
it. Like
Yeah. Okay. So that's pretty much what I figured.
so it's like yeah, it's not even an NFT, right? Because we have shit NFTs, but at least they're scarce,
Hmm.
right? Like they can just print Dogecoins. Like
Right.
I don't think there is like a limit at all.
That's so interesting. So I wonder what was the catalyst that sparked this run, or do you think there's like kind of forces behind it that started pumping it up, and then the masses kind of just jumped on it and momentum carried the rest? Because I do think ever since the GameStop thing became so big, there's been a huge influx of new traders who are looking for the next get rich stock or coin, right? The next thing to put their money into, to not have to think about the financials or the due diligence, and just, like, quick, Reddit, tell me something to buy, right? And so, I don't think it's very hard these days to manipulate a post to, get a lot of upvotes and essentially pump something, right? And so if there's an effort from somebody or some organization to pump up Dogecoin, I don't think it would be hard to achieve. Now, I'm not saying that's what happened, but I could see it happening in the current state of retail investing.
Yeah, I don't understand exactly what the trigger was. I know there were some Elon tweets, but
Elon is the biggest culprit of this
Elon
entire.
has been tweeting this thing for a while though. So why the sudden increase,
Right,
right?
right.
That I don't understand.
I meant Elon's the biggest culprit of pumping a stock to retail investors through his Twitter. It's actually insane the power he has.
Yeah, I man, like he's like the meme lord in chief. I just
Yeah. I have no idea what his motivations are, but I think a large part of it is just being in the
I think
public
it's
eye.
entertainment. I
Yeah.
think it's entertainment.
You think
I
it's
think
just
it's
funny to him?
own entertainment. It's like
He's just
he
bored.
gets a kick out of it.
You're probably right, yeah.
Like I don't think he's nefarious.
No, 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 I don't think so. I don't think it's like some like big brain plot to like pump up different things he has like secret stakes in or anything. No.
Yeah, I just don't think he cares about money on its own enough for that to matter to him, right?
Sure, yeah.
I think this is entertainment for him. Um, should he take more responsibility? I don't know. Like, okay, asking for him to take more responsibility for what he says and stuff, right?
Uh-huh.
But I think the guy has a mind of his own. You know, he cares about his stuff. He'll do his thing, and he just wants to be left alone to do whatever the fuck he wants.
Yeah. Who are we to tell him otherwise?
Because it's really interesting, right? Like I told you, like I've been following him since around 2013 ish,
Mm-hmm.
and back in 2013, I think if you were to search him up on YouTube, you don't get that many. And mostly what you see are like these interviews with him, and he seems really earnest, and he's like, he just seems like he seems like a person who's really passionate about these things, right? About space, about like electric cars, about the technology, right? He just seems to be really passionate about those things, and he just seems like a big geek,
Mm-hmm.
right? And then I think he got like so popular, and then like he started having to shoulder responsibilities, I think, right? Like before, I think he could say whatever he wanted, and then I think people start asking to take more responsibility for it, and he didn't, and it seems like he went the complete other way. Right? He became like way more memey than like I ever thought he would be.
Yeah.
Maybe he's always like that, and this is just leaking onto social
No, it
media.
definitely feels like he's been like upping it, the level of meme over the years. Like he's been ramping it up to see what he can get away with.
Yeah, I don't
To,
understand.
to me, the first public transition I feel like I noticed was when he went on the Joe Rogan podcast and smoked the blunt, and that went viral and kind of blew up, right? And then from then, like you would just constantly start hearing about his tweets more and more. That was around the time when he tweeted like, "Oh, I'm gonna buy back the stock at 420 or something like that."
Yeah.
It was like a week or two after the blunt thing, so I feel like it seemed like a somewhat sudden transition for me, where like before that I'd known him as this respected CEO and like kind of visionary guy, and then suddenly it was like this stark shift into full on memes. But
Yeah.
maybe it was before that, like maybe he was already like that and I just wasn't following.
I mean, he's always been a little bit eccentric, right? Like I
Mm-hmm.
think he after he sold PayPal, right? Like I think he had like what 30 mil or something like that.
Mm-hmm.
Actually, maybe more than that. I think that was after 30 mil was after like his first, like after his like .com company. I think after PayPal was like in the hundreds of millions,
That sounds more
right?
about right. Yeah, I think PayPal's worth
Yeah,
more than 30 mil.
yeah. I think maybe he got like 200, 300 million out of it, and I think he spent it on like buying this car, right? Like this like really expensive car, and then he like crashed it,
Oh, I didn't know
and
about
it
that.
seemed like he didn't really care. Like I think the guy has always been like, yeah, like different, eccentric, I guess, but nothing wrong with him, right?
hmm No, I mean
And maybe it just,
he's definitely not malicious in any way. Like, I wouldn't
yeah,
compare him
I
to
think,
Trump in any way like that. It's just he holds a similar amount of power and attention, with his tweets.
hmm
Yeah.
yeah, and it seems like the more publicity he got, the more it got like accentuated. I don't know if it like because he was able to influence so many people that it like kind of egged him on. Maybe that's part of it.
hmm
Um, but yeah, really interesting. I guess we're getting a little bit off topic,
True.
but
True.
yeah, Dogecoin. Yeah, I guess there are really truly three categories of cryptocurrency: store of value, technology, and meme.
Let's expand that to say there's three categories of any security that,
Well, stocks, eh? That's
yeah,
true.
right, like any investment thing that like the value is either from like store value, like if people believe in it,
Gold,
although that's more for commodities, I would say.
right?
For stocks, you could probably say it has to do with current like earnings versus a future growth potential, right? Those are two big categories. And then the third
Kind of
one is,
falls under technology because every company, in a way, is a technology company,
you're
right?
right.
Because we can just say like manufacturing is technology, right?
You're right. You're right. Yeah, you can. Yeah, that's true. Makes a lot of sense. And then
Or,
that,
or yeah, we can even not say it's technology, but it's generating value.
sure, yeah, like how do you generate value with your company's technology or processes or services, what have you.
Hmm.
And then the third is the hype, baby. The
The one that's rising the fastest.
the freaking hype, man. Yeah, tell me what to buy. It's Wall Street
And
bets,
so
baby.
on the topic of I guess like markets now, right? Like so recent Bitcoin news, recent crypto news, I don't know if you've heard, is that there's been a huge market pullback.
Okay. Is that reflected in the stock price or in the coin prices?
Oh yeah.
hmm
Let's see. I'll just quickly go on
So you tell me it's a
Coinbase.
good time to buy?
This is a dip for sure. Um,
I mean, wait. The
how
beauty of
so?
coin, the market's open, all like 24 hours. You can buy whenever, right?
Yeah, exactly.
Oh, perfect. So now I can look at charts 24/7 instead of just till 1 p.m.
But yeah, I think Bitcoin's gone down. Like, I think last week or 2 weeks ago, Bitcoin was as high as 80,000 Canadian. Now it's down to 63.
Oh, that's a big dip.
Ethereum
Yeah.
was up to 3K. Now it's like 2.8.
Okay.
And then everything else kind of went down the last few days. Like I remember going on Coinbase one day and like just everything was red. Like their top, they tracked like top 50, 53 coins. They were all in the red.
I've noticed
Pretty
that's
crazy.
been happening in the market in general lately. Is a lot of sectors or like companies in the same sector are seeing drawbacks on the same days, followed by like green days, after at some point. And I think this is something they call sector rotation. It's like when um, larger investments or investors move their money, like shift their money and redistribute it within their portfolios, and it ends up looking like a huge pullback. And I'm wondering if maybe that's what happened here with Bitcoin, or is there other explanations?
Yeah, the way I've heard people say is that it was just a lot of margin calls, like a lot of
Oh,
people were
okay.
too leveraged. And it's like a deleveraging event.
Mm-hmm.
I don't know how much to buy into that.
Why do I
I've heard
feel like I'm starting to hear that kind of explanation a lot whenever there's big movements? Is people are like, oh, the hedge funds have to cover their shorts or their calls, and
well, in this case, I don't even know if it's hedge funds. I think it's individuals, right?
so I didn't realize you can do margins on crypto.
Well, I guess you don't even have to do. Let me think. I think you can on some exchanges, and I
Mm-hmm.
think the other aspect of it is, I guess even if you just bought, if you borrowed money to invest, right, and then if interest rates go up, it becomes a problem. Maybe,
Mm-hmm.
man, like this stuff, we have a lot to learn.
It's a cool topic though.
Yeah. Have you heard about the Archegos thing?
Sorry.
Archegos?
Okay, I've seen that word pop up, but I really have no idea about it. Could you elaborate?
Yeah, I think this was a few weeks ago, maybe even a month ago now. Basically, I think it was a guy from, is he from Hong Kong or Singapore?
Okay.
And he went to all the big banks and he did swaps, and he managed to leverage himself apparently from around $1 billion to $100 billion. Now, a 100x leverage, and he put it all into like I think the Chinese like Asian tech companies like Alibaba and
Okay.
like Baidu and stuff.
Okay.
And then he got margin called, and all the banks, and so like the banks did the swaps for him, right? So the banks actually own these shares, and the banks had to sell. And I guess they weren't communicating with each other, so they didn't realize how much they had all leveraged them up so much, and they
How did
all want to
he?
sell.
Oh, I wonder how you convinced
And I
all
heard
them.
this story, and I don't know if it's true. I heard this story where the banks, yeah. So again, I don't know if this is 100% true, but I've heard that the banks got together. Like I think the banks were involved, like Credit Suisse, like Morgan Stanley,
Can
like
you
Goldman Sachs.
imagine the war room that was set up for that meeting?
And I heard that they were gonna like do a slow deleveraging, like they were gonna do it together, right? And so they were not gonna like rush to sell and compete and like basically like trader the price, right?
Right, right.
They're gonna do this slowly over a period of time. And again, this is just a story of a first, so I don't know if it's true, but I heard that what happened was like the next day, Goldman Sachs like, "Fuck you guys," and then they just went for it. And then this triggered
This is the
everyone.
prisoner's dilemma, right? This is literally the prisoner's dilemma played out.
Yeah.
That's
So
so
what I heard
funny.
was yeah, Goldman went for it, and everyone else.
That is so funny. I knew that was coming though. I was like, one of these banks had to crack, right? Like these greedy motherfuckers.
Yeah, yeah. So that's the story I heard, and
That's
like
hilarious.
whether it's true or not, it's definitely the most entertaining.
I need to read up on this. This must have appeared on Wall Street Bets or something.
I'm sure this. I think this was big news for a while because it was $100 billion,
Yeah,
right?
that's
So it's
insane.
bigger than the
I've
GameStop.
been so out of loop lately. Yeah, I gotta read up.
Yeah, so I think if you look, the prices for a lot of these like Chinese tech companies, kind of like traders and
Kind
all
of
that,
died.
like I think some of them went down like I heard like 30%.
Damn. Okay.
Yeah, and so I guess it would have been a good time to buy
All
it all.
because of Goldman Sachs? No.
I mean, it truly is all because of this one guy, right?
Yeah. But he was already a billionaire to begin with.
Yeah, I think he was like a hedge fund guy. The story I heard, I think, is he actually got caught for insider trading at one point,
Okay.
and so he had to become a family office rather than manage. Like he was basically barred from managing other people's money.
Gotcha.
So he's very rich then, yeah. So
So
that
it's
one
it's like his
part
own.
made
That's
up
his own
fine.
portfolio. Yeah, that's pretty impressive.
Yeah, yeah.
Okay,
I mean, I
because
don't
when
know
you
about.
said he was a hedge fund guy, I was like, holy shit! So he took he took the like resources he had like from the bank and did that, or like from his fund and did that. Like this guy's got massive balls, right? Like he was either gonna get fired so hard or promoted like 10 levels off that play. Oh my
Yeah,
gosh, that's
yeah, his
insane.
own money. So I kind of expect him to have lost a shit ton of money.
Yeah, right. I mean, damn, that's hella ballsy though. Like that's insane.
Yeah. Um.
But okay, so I
Market.
think at this point, yeah, we've been a little more off topic. Mostly, I think because both of us just don't have that much insight on crypto. So, I mean, is there anything else you wanna talk about on these
I
topics?
don't think so. I think I got my thoughts out.
Yeah, yeah. I mean, despite our knowledge gaps, I think it was pretty good conversation, and I did still learn a lot. Um,
Yeah, I think at the end of the day, even though we don't know that much, we know enough to have a conversation about it in
mhm,
a big
mhm.
picture way. And I mean, you've even had experience, programming a blockchain. So I think
Sucked.
that's really helpful. What's that?
It sucked.
Maybe your prof started Filecoin and he was just using this as like a test to see if he should hire anyone from his class.
Funny you should mention that because we actually killed it on that project, and the prof was like, okay, there's this company called Axiom Zen, and they work with blockchain technology, and they were interested in interviewing like anybody who got above a certain percent on the project, and we got I think 98 or something.
Wow.
So yeah, like he was like, if you guys want to speak with people from this company, but I was going to Amazon already. He was going to Microsoft, and like, nah, we're good. Like, what's the next
Dude, you
project?
missed out, man. I really think that if I were like a new tech grad,
You would go
I
for a
would go to
blockchain
I would go to
company.
crypto.
I would go to Coinbase if I could, but
It
um,
just seems like there's so much upside, and even if the private companies fail, right, or like these decentralized things fail, then you just work for the government to create their digital currency.
huh, interesting. I mean,
It gives you a lot of opportunities.
I think you're right, but I think in tech, like, there's no shortage of opportunities.
Mm.
And so for most people, it comes down to a question of security versus potential um, potential growth, right? So if you join a bigger, more stable company, you're going for the job security, stability, and you're expecting more mentorship within the system, right? And if you go into like a startup or like a new field, kind of like crypto, you're banking on the potential growth. You're hoping your company valuation will increase, maybe IPO one day. That's kind of the dream, right? Or you're hoping that the skills you learn will transfer you into this hot field. So I think at the time, like both of us, it's not that we didn't believe in crypto. It's just it wasn't a thing on our mind. It was like yeah, it was this cool piece of technology. Like we worked on it, but it wasn't something that we were gonna uproot our, I guess, career for. I guess, and even now, after having these discussions, like I don't. I think it is cool, and there's a lot of very interesting applications. But I don't know if I would just say like, screw what I'm doing right now. I have to work on crypto.
Yeah, I mean you're in like the biggest company in the world, so.
Which is not a great thing. Not always a great thing. There's definitely a ton of. Um, I guess the larger the company gets, the more processes you have to follow, right? And not all of them are conductive to the workings of your team, right? They may have made sense for another team or many teams that went through, I guess, some issues, and they decided like this would be beneficial, but oftentimes it can just add extra grunt work or unnecessary dev hours, right? And I think that's one annoying thing for sure. I think at startups you have a lot of flexibility and freedom to just try to do cool shit, right? And like just push out code and see what works. Like it's what you see in movies and shows because that's the cool stuff. But yeah, I don't have much else on this topic either. I guess real quick, where do you see crypto in 5 years? Do you think we'll have replaced traditional financial institutions and money currency? Do you think that'll ever happen?
I think Bitcoin and Ethereum will probably still exist,
Mm-hmm.
and I think they'll be doing
What
quite
do you mean?
well.
You don't think Dogecoin will become the de facto currency of Western
I mean, we'll
civilization?
see. We'll see. We'll see.
Uh huh.
We could be living in like the idiocracy world, right?
I feel like ever since Trump got elected, that became the timeline, right? He's literally the president, like Terry Crews.
I mean, if we had Elon Musk being the president, then Dogecoin probably
Oh my
will
goodness.
go to the moon.
Yeah, you're right. You're right.
But yeah, so hmm, let's say how long of a time frame are you saying? 5 years?
5 years. Let's say 5 years.
Yeah, 5 years. Bitcoin, my prediction, 150K to 200K USD.
Mm.
Ethereum, 5K ish. Maybe more. 5K to 10K, I guess. That's a big range, but yeah, 5K to 10K, I think. Um, and I think a lot of the other coins will be wiped out because people are going to become more educated. And I think governments will start to build their own digital currency, which they already are, right? Like I think India is doing it. Just the other day, Gordon was telling me about how there's this like Ethereum alternate called Cardano, which is made by a guy who co-founded Ethereum, but
Okay.
then believed that Ethereum could not scale, so he decided to go this other route. And I think he does a lot of work with corporate company.
Okay.
So rather than doing this completely decentralized, for the public, etc., it's more corporatized.
Mm-hmm.
And I think they're the third biggest cryptocurrency. So I think maybe maybe they will be the one to help a lot of the governments to do this stuff. Maybe the government themselves would try to develop the expertise, although I think it'd be really tough. Right, the government has to fight the private sector to like attract talent to do this. It's gonna be
Yeah.
tough.
Yeah.
I There's gonna be regulations, so there are gonna be ways to pay taxes on your Bitcoin gains, right? There's gonna be all that kind of stuff. That's kind of where I see things.
So you like essentially, I can, if I could, maybe compare it to something like Netflix, where they kind of revolutionized digital streaming, and for a while we kind of enjoyed traditional TV catalogs being offered all in like one place that was very easily accessible, and it was really, really cool. And then over time, we saw competing streaming services pop up, a lot of them from these traditional TV networks. In this sense, I'm comparing to governments creating their own cryptocurrencies to essentially replace their national currency, right? Um, and so suddenly it's like we have this new technology that kind of changes up the way we used to do things, but then over time becomes more regulated and starts looking more like the traditional way we used to do it, where now we have these different competing coins, and in a way that's like different currencies competing against each other, similar to these streaming services competing to each other, which is kind of like TV channels in a sense, right? They're just, except it's not digitized. Um, does that kind of sound similar? Do you see what I'm drawing at there?
So kind of just like the introduction of competitors, mostly.
Introduction of competitors and like the way that I guess these competitors, like they try to model their business to existing, like to what works before, right? So by introducing competitors, especially from the government, they're trying to legitimize their own coins, right? Obviously, and it's gonna hold more weight and legitimacy than a coin like Dogecoin, in theory, because it's backed by, a central institution. I mean, your government. If you don't trust your government, then you probably should not live in your country. Um, so, like, I don't see how a lot of private coins can compete with these centralized coins, and so in a way that kind of goes a little backwards, right? We're going back a bit towards centralization, um, in favor of removing, or in favor of like its legitimacy.
Yeah, I mean, I think the whole thing with Bitcoin is supposed to be decentralized, so
Mm-hmm.
that's why I think it will still exist because as you get these centralized
I mean,
government
I think you're right. Like Bitcoin won't go away, but I think a lot of these other smaller coins, these forks, will probably disappear because of that.
right, I think I can see that happening. Um, but yeah, like just fundamentally, a centralized central bank coin is going to be very different from a decentralized coin,
Yeah.
right? And so they're serving complete different purposes, right? The government coin the government adoption of blockchain is more for its technological uh, uses, right? Not for the ability for it to be decentralized. And the
Mm-hmm.
government would adopt it for the sake of transparency, right? Uh, and efficiency in some ways, right? Like we talked about, like the difficulty of transferring money, right? Like filling out these forms takes a long time, um, and if you wanted to track something like house deeds, right? Like ownership of real estate, maybe this is a good way to do it as well. Those things can probably be centralized, but yeah, I guess I'm thinking about like where would Ethereum fall under this, right? Ethereum to me seems to be more about the technology, right, rather than about the sort of value. And then secondary to that would be how important is it for it to be decentralized? I'm thinking about the people who work on Ethereum, who are passionate about it. They seem to really value decentralization, right? So
Mm-hmm.
I think it will probably still exist as the decentralized, this technology platform. And then the thing is, can the government attract enough talent to work on their technology aspect that rivals the private sector or like the decentralized sector? I think it's going to be very tough, right? So I think Ethereum will still exist for that reason. Um, And then the smaller coins can probably still also exist. They can have technological capabilities above the Ethereum platform. Although I think I've heard that a lot of these other coins, they're just tokens built on top of the Ethereum platform. So they're all part of Ethereum.
Oh, okay.
Right? They're just currencies within Ethereum in a way.
So Ethereum, okay, yeah. So Ethereum has essentially created a platform, right?
I think so.
And so that's why ETH, the coin, is a separate thing from Ethereum, the base technology.
Yeah.
Okay.
Yeah, that's the way I understand it. Like the way I understand it is like ETH is just is a currency within Ethereum, but you can have many currencies built on top of it.
Wow, that's an additional layer though. Like it doesn't that kind of introduce centralization because all these different coins are founded on top of this one platform.
I mean, it's centralization in the same way that Ethereum is centralized, which is decentralized, right? So
That's true.
centralization on a decentralized platform is still decentralized, right?
Damn. Yes.
Because at the end of the day, the computation is still
Drop the mic, Tony. That's the end of the episode.
So like the because the computing is still happening on all these different nodes.
Yeah, that's true.
So it's not re-centralizing. The thing for me has always been like, how do I invest in Ethereum, the platform, right? Because Ethereum is like I think a non-profit organization.
Right.
It's pretty hard to invest in that, right? But then like if you want me to pick from all these like hundreds, if not thousands of coins that are out there right now, I'm just like, I'm definitely gonna fuck it up. I'm gonna end up picking the next Dogecoin, except this one's not gonna move, basically, right? So, yeah, it's gonna be a challenge.
Okay, yeah, that makes sense. That helps me understand a lot more, especially about Ethereum. So appreciate that.
Yeah, I think we can probably sign off here.
Yeah. I think on that note, that's a pretty good one to end off on.
Yeah, and to anyone who's like sticking with us, like trying to work through this as we, fumble around this, like, thank you. We appreciate it.
Thank you, and we apologize. You can definitely find much better, well-made videos on explanations on how these technologies work. So we do recommend looking at those. We're just two people giving our opinions and thoughts on topics that we don't have much knowledge about. So if you like listening to more of that, please follow our channel. But yeah, I think that's a good one to end on. So see you guys. Thanks for tuning in. All right.